Hello, everyone. This is Simon with AvaTrade, and I'm sorry I'm not greeting everyone with Happy Sunday because I don't really feel happy. And I'm sure that you know what's happening in the world. And let's hope and let's pray that this chaos ends soon and the people won't die again, ever. Sorry for starting with such a negative mood. But business goes on, life goes on, and we shouldn't be depressed, should be strong, and we should try to participate in helping as much as we can, giving support to people, and so on. Okay, so our weekly trading plan. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I started my trading career in June of 2000 when the market experienced a burst of .com. And since then, I've been involved in trading, and that's something that I really love. I hope you do too. After 11 years of intense proprietary day trading, I moved into a more calm way of trading, started to mentor and educate others, and currently I'm very happy that I have an opportunity to assist our customers. The agenda of the webinars usually is the same. I'm just trying to explain it to new people, and special welcome for you, of course. We'll talk about indices, stocks, commodities, forex. Also, we'll discuss big picture, something that happened in the past week, how the market react, how we finish the week, and then we try to plan the upcoming week. And as I always say, as traders like to say, you plan your trade and then you trade your plan. This way, definitely there's no guarantees, but there's a better chance of being more successful and less impulsive and less chaotic. Risk warning, you can find the full statement at avatrade.com. And everything we do here, it's purely educational, of course. Now, these are the channels that I highly recommend for you to follow. You have Telegram, you have Twitter, and my favorite YouTube channel. Why is it favorite? It has the most information there that includes educational tutorials, webinars. You might be watching this webinar also on YouTube. So if you miss the live webinar, you can always find it on YouTube. It's being posted either the same day or the day after. I have a huge library of past webinars. You can learn a lot. Please like, if you do like it, of course, don't fake it. Share it with the other people if you feel that could be in benefit. And also click on that bell that you'll be notified when new things are coming in. Okay, so last week, it was just to put it all together in a way, the mood on the market, the mood in the world these days, it's really intense. And we can talk about it. I'm sure you've been watching the news. I'm sure that some of you watch the terrible graphics, that terrible things that were done by the terrorists in Israel. And I just want to quote or read to you what JP Morgan CEO said, Jamie Dimon. And I quote, "This may be the most dangerous time the world has seen in decades." So that's his saying. And again, I believe in power of human consciousness. And if we all focus on positive and try to inject positive energy, and of course do the physical actions that we need to do, that we can remove this darkness, and I hope that happens. So the war is the main focus, and it's kind of took away the attention from Ukraine, which is still a lot of chaos, a lot of people being murdered there from both sides. And it looks like market is experiencing a lot of pressure So this is the article you can read on marketwatch.com, and the title says the stock market likes to climb a wall of worry, but now that's crumbling, and that's the picture they chose. I guess crumbling wall. So it says the market timers are eagerly buying this rally, a signal for contrarian-minded investors to step aside. I mean, we can take it as we want to, but it looks like between the wars, between the high interest, between I think the big move on Friday to the downside started when consumer sentiment was released by University of Michigan, and it was low, much lower than expected. And I'm just going to read to you what the economic calendar says as a definition. The Michigan Consumer Sentiment Index released by University of Michigan is a survey of personal consumer confidence in economic activity. It shows a picture of whether or not consumers are willing to spend money. Generally speaking, a high reading anticipates positive or bullish for the US dollar, while a low reading is seen as negative or bearish. Okay, so what does it mean? And I've been reading a lot of things and just analyzing things in a logical way. We're talking about the U.S. People, right? The Americans, with the pandemic and payments they received and everything, they did have some savings. So you couldn't fly, you couldn't travel, you couldn't really spend much if you're locked at home. But now it says, or a lot of analysts saying that they're running out of those savings. And all the mortgages are high, car payments are record highs, the gas is high, everything they purchase is affected by the high inflation. So they're not really running to buy new things. And I usually use the analogy, when you have no food in the house, you're not going to go buy a new car or new TV or anything that is substantial amount of money. So again, the whole mood, I'm not going to repeat or make it darker than it is, but the mood is not so positive. So things are getting intense in the Middle East over the weekend. We'll see how the markets, it's been a week since the tragedy started. And it could be that Monday we're going to have a gap down on indices, and then the stocks will gap when the market opens and other things. So that's a general thing that's happening. Now, things for the upcoming week. This is the economic calendar for new people, people are not familiar with that. I take the high impact events only. So that's for the upcoming week. You can filter through it. Again, you can find it on our web trader or the app or any third party. This is public information and it's available to everyone who's curious. And it's good to know in advance that certain things are happening. So prepare yourself, whether you like to participate in trading into the news, before the news, and after the news, it's up to you. Okay, so Monday we have CPI numbers from New Zealand. Tuesday, Bank of Australia meeting minutes. They will be discussing their last decision. We have employment data from UK, retail sales from US, exactly following the low consumer confidence numbers. Just to give you an idea, previous number was 68.1, consensus was for 67.4, and the real number came out at 63. That's for consumer confidence. So based on that, logically, we could expect a lower retail sales. We have CPI numbers from Canada coming on Tuesday as well. Wednesday, GDP numbers from China and retail sales from China. We'll take a look at Chinese index in a moment. China still not doing that great, a lot of issues, and now, of course, intense things with the war. China is not directly involved, but you never know what's going to happen as you see the US sending their ships to the Middle East. UK is participating. So I wouldn't be surprised if China start doing things on their side. Wednesday, the same day, we have CPI numbers from UK. Thursday, employment data from Australia. And Friday, retail sales from UK. So these are the things that are coming out next week. Of course, there are more, as I said, you can filter through them. I only choose the high impact events here. Okay, so we'll move to the terminal now and try to see what happened on Friday and how the week ended. So we'll start with China. China is testing or challenging the previous support. As you could see, in the last 2 days of trading, we raised the whole gain for the beginning of the week. So you can clearly see there's a sell-off there. Now with China, as you know, usually I bring few instruments, and that copper, oil, and the two commodity currencies, Australian and New Zealand dollar. So let's take a quick look. Copper looks almost identical to Chinese index. We are challenging the previous support. It was a straight 4 days of selling. Crude oil, on the other hand, it would be probably selling as well, but because of the intense things in the Middle East, historically oil is reacting to it. As I mentioned last week, it did gap up, and now we closed on Friday at the highs of the week. So potentially we could actually move higher and challenge the recent highs on oil, as things are far from being cooling down, unfortunately. So that's crude oil. Now Australian and New Zealand dollar are super weak. They reacted to China tremendously. Of course, they reacted to US dollar. When we get to currencies, I'll show you more. But just to show you how China is affecting, and please take that into consideration, then Chinese sell-off affects normally crude oil, copper, Aussie, and Kiwi, or Australian dollar and New Zealand dollar. And of course, vice versa. If we have a recovery in the Chinese market, those instruments could move higher. No guarantees, but the correlation is there. Okay, so that's China. Let's move to US, and then we'll see how right after the consumer confidence numbers got released right here, the market was doing actually fine. It was trying to move higher, and the moment the consumer confidence came way below expectation, we sold and continued selling. This is Dow Jones, this is S&P, and that's NASDAQ. So if you take daily chart in those, so you could see that we did try to lift our heads above the 200 moving average on Dow Jones. But the last 2 days there were sell-offs. S&P 500 rejected the 50 moving average here. We're still above the 200. And NASDAQ, similar situation, we just closed below the 50 moving average here. Now, important to remember, we started earnings season, and the banks started with their reports. And JP Morgan started, Wells Fargo and Citigroup, they reported good earnings, and they actually say it's because of the high mortgage rate, so they got nice income, but the projection is not that positive, and a lot of banks are getting a pile up of bad loans, as a lot of bankruptcies, a lot of corporate bankruptcies, and they are kind of afraid. And that's the quote that I mentioned to you of the CEO of JP Morgan, and I'm going to read it again. This may be the most dangerous time the world has seen in decades. So that's a lot of uncertainty. And like I said, the banks started, and you could see it right here. I'm going to show you a few banks how they started reacting to it. So we had JP Morgan right here, as you could see. It gapped, it moved higher, but then it sold with the market, and it sold aggressively, as you could see here. So That's JP Morgan, Citi as well. It gapped nicely, but it closed the gap. So on that negative projection, we could see move to the downside. Now I'm going to jump ahead a little bit. I was going to leave it for later, but there are 50 out of 500 firms of S&P index that are reporting this upcoming week. Okay, so you have Monday, Charles Schwab is reporting, and then Tuesday you have a lot of companies. You have Bank of America is reporting, Goldman Sachs is reporting, Johnson and Johnson is reporting. It's not a banking sector; it's pharmaceutical, as you know. You have on Wednesday, Morgan Stanley, Netflix, Procter & Gamble, Tesla. Thursday, you have American Airlines, AT&T, American Express. So it's going to be a very important week. The earnings are going to come in. And I'm just going to go through a few stocks from the earnings when we get there. Right. Meanwhile, I just want to show you a few things. So GM, the strike is still continuing. And you can read about it. There are a few articles on the website. They kind of agreed not to spread beyond these three automakers. But the discussions are there, and they're very tight. They calculated how much the industry is losing daily, hourly, and so on. And there are a few interesting details about the leader of the strike and the CEOs, and they're really exchanging strong words. Okay, so GM is selling. We just made a new recent low, just broke to the previous level of support. And again, the strike is not over. A lot of people are out of work. And let's see how that ends. But at least there's kind of a concession that they will not spread to different companies. Meanwhile, the analyst saying that other automakers are gaining from it, and Toyota is one of them. So that's the automaker strike. Boeing, as you could see here, it was a nice move to the upside with the hope of recovery, and then the news came in. I think Deutsche Bank. I'm not sure exactly where I read it, but there's a kind of I don't know if you call it a threat, but a chance that less Boeing 737 will be sold due to some special inspections that the planes had to go through. So as you could see in the past 2 days, first it was a reaction on Thursday, and Friday was a gap and continuation to the downside, and we are retesting the recent lows. So we'll be watching Boeing, what's happening there. Pfizer also, as you could see, similar situation. We started a little bit of recovery in the beginning of October, and Friday also on the news that Pfizer reports that there's a very low sales of COVID-19 injections, and I guess the stock reacted to it right away. So again, both Boeing and Pfizer will see how they react if they reach the previous level of support. I'm just going to read right here what they say. I'm going to quote from the article. The healthcare giant said it now expects to end 2023 with an unexpected 9 billion drop in sales of its COVID-19 vaccine and antiviral treatment Paxlovid. So $9 billion short. It's a little bit significant, I guess. So the stock reacted to it. Okay. Now let's go through the stocks that are reporting this week, at least to some of them. We have Netflix reporting, as you could see. The stock is already below 200 moving average. It's been selling since mid-September, September 11 actually, and slowly was bleeding lower. Let's see if the earnings will save the stock or add to the downside pressure. Now, another thing I just saw they're planning to start something new, like small restaurants or the places where people can come and have some I call it junk food, some fast food. So let's see how that works. Maybe that's also kind of adding to the pressure because a company that's streaming going into food business, it's like me becoming a shoemaker or something that I've never learned how to do. But again, I'm not judging. Maybe it's a good move. But anyway, the stock is reacting to the downside. We have, as I mentioned, Bank of America and Goldman Sachs reporting on Tuesday. So again, they might be having similar move what the other banks initially moving higher and then selling. But again, we don't know what the market is doing. But considering the situation and things are heating up, we probably see general market continue going down this upcoming week. Goldman as well. We might, if we are selling here, we might see the retest of the lows here. Tesla is also reporting, as I mentioned, and that's happening on Wednesday. As you could see here, Tesla is sitting right on the 50 and 100 moving average at around 250. So let's see how this week plays. Okay, so let's just summarize things for equities. Equities reacted in a negative way on Friday to the consumer confidence, and the war, Ukraine and Middle East are adding a lot of pressure to it. High interest, of course, high pressure. The banks initially are reporting good news, but projections are not really positive. So on the equity side, we are feeling the downside pressure. Now let's move to commodities and let's see. We'll start with the ones that we just mentioned. So copper reacted to China, of course, and in general, the market situation. So first of all, we just want to see how we react to these levels around here. So initially, we hit that level on May 24th, and that's 354. Then we had a nice move from there back then, and now in beginning of October, we had an attempt to break through it. It looks like we're holding that support. So there's a big chance that we might come and retest that support again. And from there, we definitely should see what's next. If we do break it, we might continue lower and potentially retest this level here around 336. And if that doesn't hold, they had the big sell-off that ended at 312.90, and that was back in July of last year. So we might be retesting that as well. So you could see we are below all the moving averages. Crude oil is moving higher. We had a week of sell-off here, and then with the war in the Middle East, we had Friday. Nobody wanted to be short oil into the weekend, and that's the smart move because there's a chance that the intense actions or intense events in the Middle East can cause shortage, which caused a lot of fear right here until we almost reach 195. We had a level at the end of September. So let's see what happens if that move on Friday was justified. And if we might open with a gap and continue retest the recent highs as well. So that's crude oil. Gold. Gold has had a party on Friday, and the reason is the 10-year yields cooled down. But I think, in my opinion, the reason is gold is becoming an old school safe haven again, as the market sold, as the fear is overwhelming everyone with the wars. As you could see, gold just kept on running. And it didn't just happen because of the low consumer confidence. This run happened the day, started the day before, and it just went with 1 hour of correction here. And that was actually at the news, the consumer confidence, and we just got another injection of energy, and we just moved higher. So here, technically speaking, we could be getting into resistance. First of all, this level right here from which we sold around 1937, we're about 5 points away, and we're also very close to the 200 moving average, which is a point higher at 1938. So again, it depends on the intensity of the war and intensity of the fear of the public and investors. If things get out of hand and if we have a panicky sell-off on the market, which we definitely could have, there's always a chance. And we could see gold just breaking through these things and continuing higher. We'll be watching that. Soft commodities also reacted to it. They've been super weak lately. In the last 2 days, we tried to move higher. And by the way, I removed all the old levels. So I'm going to start setting up new levels now because the charts became a little bit crowded. So here, the level from which we started the run was the end of May of this year, and there was 573. As you could see, we're back into that area. So it could be that after being a resistance for a while, we're getting back into support, and this could be a beginning of a move to the upside. And here on the weekly chart, it looks very nice. We went below that level. See a lot of actions back in 2020. Went below, we had up day, but still below, and then we're trying to climb back into this area. And Friday, we did come back and closed above. So if we see price action above 573 here, building up support, we might see continuation to the upside. Similar in copper, in the corn is building up some support, and we are above the 50 moving average. And soybeans, similar idea here. We did have a nice move to the upside, erasing the previous multiple days of sell-off. So we'll be watching the soft commodities. And let's take a quick look at natural gas. We had a nice move the moment we broke the 3 level, if you remember. And the previous week, the week before, was a very strong one, and now this past week we had a little bit of retracement, and let's see if we can come all the way to 3 and retest and set up a support, which is a normal thing. The moment we break out of the long time of resistance, there's always a chance or strong chance that will come and confirm that we were in a different dimension. Okay, that means we were in a resistance below 3 for a very long time. The first attempt to break 3 was in March. The second one was in August, and then we were trading very close to that 3, and finally we broke through it on the 5th of October. And it could be that we're coming here to say, okay, that was a resistance, now it's a support for sure. That's one of the scenarios. Second scenario, we can just break through and get back into this channel. We've been trading for a while between 3 and 2. But the first scenario is more likely, probably based on the seasonals. We're entering into the fall and winter following, and intense things in the Middle East could be also adding into the bullish mood on natural gas. So that's as far as commodities. Now we'll go to Forex. So we'll start with dollar index. So first thing comes to mind, if the gold is running, the dollar should be selling, right? But it's not. As you could see here, the last 2 days, dollar was very strong after the recent sell-off. Thursday was a strong move on the dollar. And after hitting 520 here, I think, 527, we closed at the highs, and Friday we did move higher here. I just want to see the reaction on the news. So with the consumer confidence being low, the dollar for some reason moved higher and the gold moved higher. So it looks like the gold is not, not as strongly moving against the dollar as it's being a safe haven, as I mentioned. So dollar, when Thursday strong move higher, Friday continuation. If we continue this way, we might retest the recent highs around 106.72. We'll be watching what happens there. Okay, now from the other currencies, of course, the major currencies are moving lower. Among them, the weakest one is the Aussie and New Zealand dollar, and they kind of have a double impact. First, they're reacting to the strong dollar, of course. Second, as I mentioned in the beginning, they're reacting to weak Chinese market or Chinese economy. Pound and euro also weak, a little bit stronger than the Australian and New Zealand, but still selling. And on the strong side, you have Swiss franc, and it looks like Japanese yen is also gaining. So take a look. Swiss franc is strong, even on the strong dollar. Swiss franc overpowered it on Friday. So what's important is to follow all the pairs with the Swiss franc. Take a look, especially euro and pound. They sold significantly against the Swiss franc, much stronger than dollar. Take a look, especially euro. Euro is super weak. So just out of curiosity, I wanted to see, because I haven't paid attention for a long time to this pair. But if you remember, January 15 of 2015, when a lot of people lost a lot of money and some brokers got out of the business, that was a surprise move by Bank of Switzerland when they unpacked from the euro, and this move was tremendous. This was a one-day move, a 1 hour move. It was crazy. So it took a long time to get back there. This was 2015, the first time we came to this level. It was last year, and now we are trading way below that. So it just tells you something, right? So Euro CHF, probably the weakest pair on the street. So what I said, that really was, it's worth paying attention to all the pairs with the Swiss franc as they are selling. And the same thing, the pairs with Japanese yen. As I mentioned, in gold, the safe haven kicks in when the real panic comes to the market, which we could see it. And over the weekend, the panic will grow as the people, when they're not busy, not working, and they're just chilling at home, and they read all the news, and they start really panicking. So we might see a lot of people calling the brokers, figuratively speaking or literally, calling the brokers and telling them, get me out of my stocks. So we might see a panic selling starting on Monday or continuing. And the safe haven, classical safe haven, are three instruments: gold, yen or Japanese yen, and Swiss franc. So if you could see right here, all the Japanese yen pairs reacted to it as well. Even Canadian dollar, take a look, as oil ran up, had a very strong Friday. Canadian dollar didn't really do much. It was red, but open and close is very close, very close here. Open 109.44, close 109.50, made only 6 pips to the upside. So Japanese yen is among those three that's getting some strength. And that's, just to mention, Bank of Japan hasn't done anything. It's just a classical scenario of people running for safety and putting money where they feel safe. So gold, Swiss franc, and yen are back to acting as a classical safe havens. Okay. So that's something to pay attention to. And let's just take a quick look at Bitcoin. It's really flat, sitting right on 50-day moving average here. I really don't know what the crypto world will be doing, but there were also some reports the terrorists of Hamas received a lot of money in cryptocurrencies, and I guess there's some investigations are going on. I think $92 million came in to Gaza using some crypto brokers. Okay, so again, it's very hard to be positive these days when you watch the news and you feel the pain of people suffering. And I hope that we'll have some better news this coming week. I hope that the world will recover physically, mentally, energy-wise, and I hope you get some rest this weekend and prepare yourself for the intense week. It's going to be intense. Again, emotions aside, which is very hard to do, we might see big moves in the market if we are prepared, if we have a plan. There could be great scenarios for trading. I wish you all the best. Have a successful, positive, peaceful week. All the best. Take care.